non-consummation of the plans or of unexpected delays, but on the whole, such arbitrage operations proved highly profitable. There were similar opportunities growing out of the breakup of public utility holding companies pursuant to 1935 legislation. Nearly all these enterprises proved to be worth considerably more when changed from holding companies to a group of separate operating companies. The underlying factor here is the tendency of the security markets to undervalue issues that are involved in any sort of complicated legal proceedings. An old Wall Street motto has been, "Never buy into a lawsuit." This may be sound advice to the speculator seeking quick action on his holdings, but the adoption of this attitude by the general public is bound to create bargain opportunities in the securities affected by it, since the prejudice against them holds their prices down to unduly low levels. The exploitation of special situations is a technical branch of investment which requires a somewhat unusual mentality and equipment. Probably only a small percentage of our enterprising investors are likely to engage in it, and this book is not the appropriate medium for expounding its complications. Broader implications of our rules for investment. Investment policy, as it has been developed here, depends in the first place on a choice by the investor of either the defensive, passive, or aggressive enterprising role. The aggressive investor must have a considerable knowledge of security values, enough in fact to warrant viewing his security operations as equivalent to a business enterprise. There is no room in this philosophy for a